Alright folks, buckle up because we're diving deep into the world of finance, and today's topic is hotter than hotcakes on a Sunday morning. Our central figure for this discussion isn't just any regular Joe, it's the renowned Oracle of Omaha, Mr. Warren Buffett. Often considered one of the greatest investors of all time, Buffett has made headlines recently for his strategic moves in the stock market. Today, we'll attempt to unravel the mystery behind his actions, specifically his recent decision to trim his stake in Apple. Apple Inc., a behemoth in the technology sector, has been a prominent player in Buffett's investment portfolio. However, recent changes in his holdings have sparked widespread curiosity and speculation. Before we delve into details, let's take a moment to appreciate Buffett's investment prowess. His approach to investing, rooted in the principles of value investing, has led to an enviable track record of success. Countless investors worldwide look up to him for guidance and inspiration. Buffett's moves in the market are closely watched, analyzed, and often mimicked, highlighting the immense influence he holds over the investing community. Returning to the topic at hand, Buffett's decision to reduce Apple's stake. It's a move that's got everybody talking and wondering, why would he unload shares of such a successful company? In order to understand this, we'll need to delve into the financial health and market standing of Apple. But don't worry, we won't get lost in the maze of complex financial jargon or drown in a sea of intricate graphs and charts. Our aim is to break down the details in a way that's easy to grasp, even for those who are new to the world of finance. We'll keep the discussion lighthearted, straightforward, and most importantly, engaging. We're all about making finance accessible. And today's deep dive into Buffett's recent market maneuver is a testament to that. So keep your seats, hold on to your hats, and prepare for an exhilarating journey into the realm of high-stakes investing. So, let's get started. First off, let's talk numbers. As we dive into the world of tech innovation, it's impossible not to acknowledge the colossal giant that is Apple. This tech titan, known and admired globally, doesn't just sit atop the industry, it has effectively rewritten the rulebook for what a tech company can be. With its revolutionary products and services, it has become a symbol of innovation and prosperity. That prosperity is reflected in a staggering statistic. Apple's market capitalization, a measure of a company's value calculated by multiplying the number of shares by the current market price. This figure 4 sits at an almost inconceivable $2.8 trillion. You might need to pause for a moment to let that sink in. Yes, that's trillion with a T. This monumental figure is indicative of the immense faith placed in the company by its and the market at large. At present, only a minuscule 6% of Apple's shares are being shorted, suggesting reluctance to bet against the company. This incredible statistic suggests that the market's confidence in Apple isn't just high, it's stratospheric. Investors have displayed a bullish outlook on the company's future, willing to stake their capital on its continued success. And with only 6% of its shares being shorted, it's clear that confidence in this company is sky high. Now let's take a deeper, unwavering look at some key metrics, as they are the pulse of every thriving corporation. First, consider the price-to-earnings ratio, which is a simple yet effective tool to gauge the financial health of any company. For Apple, this ratio stands tall at a quite respectable 28, a number that signifies a strong and stable financial status. It's the kind of figure that you want your invested company to hold, a figure that shouts reliability and robustness in the face of unpredictable market trends. On another note, the company's trading volume is a vital metric that attracts a lot of investor attention. A higher trading volume signifies keen investor interest and high liquidity, which is good news for any stakeholder. Now, Apple, being the icon that it is trading a staggering 53 million shares daily. That's right, 53 million. Imagine the enormity of it, the sheer weight of these numbers. This level of activity speaks volumes about the investor confidence in the brand and its future prospects. However, no evaluation would be complete without discussing revenue. Like the heartbeat of a corporation, revenue patterns tell a story of growth, stability, or decline. For Apple, this story over the past year has been marked with a bit of turbulence. It's been a bit of a roller coaster ride, with a slight dip of around 3%. Yet it is important to remember even the mightiest of ships face the torment of high seas. But let's not lose sight of the bigger picture. When we take a step back and look at the past 3 years, an entirely different narrative unfolds. Apple, in its quintessential spirit of breakthrough and innovation, has seen a jaw-dropping 40% increase in revenue, a testament to its resilience in face of market fluctuations, and its power to innovate and adapt. Talk about impressive growth. But it's not all sunshine and rainbows. As we delve deeper into the financial landscape of Apple Inc., we find ourselves facing a reality that is less than ideal. The company has been navigating turbulent waters with operating expenses that have been surging at an unprecedented pace, akin to a rocket ship that's breaking free of Earth's gravitational pull and soaring into the vast expanse of space. These expenses have escalated by an eye-watering 80% over the same period. That's no small number. In fact, it's a rate of increase that could give even the fastest sprinter a run for his money. Now, this pressure on the balance sheet might be enough to send a shiver down the spine of any financial. However, it's crucial to not lose sight of the bigger picture here. Despite the steep incline in operating costs, Apple is no sinking ship. Far from it, in fact. The tech giant is still raking in profits at an astonishing rate, bringing in a net income of a whopping $100 billion. This is a figure that's not just impressive. It's a stark testament to the financial strength and resilience of the company. It's an amount that is enough to turn the cheeks of even the wealthiest of tycoons a shade of green with envy. It's a testament to the fact that despite the challenges, Apple's financial apple cart is far from being upset. That's enough to make even the wealthiest of tycoons green with envy. Now let's talk about Apple's balance sheet. This discussion about one of the most successful multinational technology companies in the world, hailing from the Silicon Valley, is crucial. Our focus lies on their financial status, their balance sheet to be precise. The balance sheet in its essence is a snapshot of a company's financial condition, encapsulating assets, liabilities, and shareholders' equity at a point in time. So, why Apple? Well, the answer is simple. Apple is a titan in the tech industry, and analyzing its financial health offers valuable insights for investors, business students, and tech enthusiasts alike. Now, it's important to keep in mind that no company is flawless, and that applies to Apple as well. Their balance sheet isn't perfect, but it's far from mediocre. Let's look at some key figures. Apple boasts a healthy pre-tax profit margin of 30%. To put it into perspective, this means that for every dollar of sales, Apple generates 30 cents in profit before tax. That's a substantial figure, particularly when you consider the competitiveness of the tech industry and the expenses that come with it. In addition to this, Apple's return on equity stands at a staggering 156%. This measure is indicative of the financial return that shareholders are earning on their investment. In simple terms, for every dollar that shareholders have invested in the company, Apple is returning $1.56. This is a testament to Apple's ability to generate profits from its shareholders' equity. So, what does all this mean? It demonstrates that despite the challenges and turbulence in the tech market, Apple has managed to maintain robust financial health. Their strong pre-tax profit margin and impressive return on equity are proof that Apple is flexing some serious financial muscle. But here's the million-dollar question: is Apple overvalued? This query has been raised countless times by investors, financial analysts, and those with a keen interest in the stock market. To attempt to answer this, one can look at multiple valuation techniques that offer different perspectives. Firstly, let's consider a basic cash flow, DCF analysis, a popular method for valuing a company's worth based on its future cash flows. When this method is applied to Apple, it suggests that the company might be overvalued by about 22%. This is a significant percentage, enough to make any investor pause and reconsider their stance. However, it's important to remember that no single financial analysis tool is flawless in its estimation, and each has limitations and weaknesses. Financial evaluation isn't a one-size-fits-all situation, and a wise investor considers multiple angles before making a decision. This is where other tools come into play, such as the SEF Valuator tool, a unique tool designed to evaluate a company's stock based on different financial parameters. Surprisingly, or perhaps not so surprisingly, it paints a drastically different picture. According to this tool, Apple's current price is not overinflated. Instead, it suggests that Apple's current is right on the money. So, what's the conclusive answer? Is Apple truly overvalued? Or is it perfectly valued as per the current market conditions? The answer, like most things in finance, isn't entirely black or white, but rest assured, as per the SEF Valuator tool, Apple's current price seems to be right on the money. So, are you keen to know the final verdict? Institutional activity and analyst consensus have a viewpoint that Apple's current market value might be just about right or a tad bit high. However, remember, this isn't any average company we're discussing. This is Apple, unarguably one of the most influential tech companies globally that has repeatedly disrupted the industry norms and set new benchmarks. When we talk about investing in Apple, it doesn't just come down to crunching numbers. It's more about having faith in what the future holds for this tech giant. It's about backing their potential to continue leading the path of innovation and technology advancement. In case you're on the hunt for more insights into stock market trends or tools for investment opportunities, why not consider Stock MVP? It's an excellent platform that has all that you need to make well-informed, data-backed investment decisions. And guess what? If you click that subscribe button, you'll become part of our engaging community, which is steadily but surely growing. We're on our way to hitting the 1,000 subscriber mark, and your contribution takes us one step closer. So there you have it, folks. The detailed perspective on Apple's current market position. Thank you for your time, and until our next session, I wish you prosperous investing.